Welcome to this video of Ask Adventis. We will be focusing on how to answer and properly think through the very common interview question, walk me through a $10 change in depreciation. This question is usually one of the first technical questions asked in any investment banking, corporate finance, private equity, or asset management interview, and it can really set the tone of your interview if you stumble through it. We don't want you to do that. We want you to nail it, and here is how. First, let's walk through what is depreciation. Just a quick recap. Depreciation is the recognition or allocation of an expense of a physical asset over the period of its useful life. Now, if you look at the visual on the screen, we have a bare bones version of 3 financial statements so we can focus on the concept at hand and see how this change in depreciation would flow through each one of these statements. Now, we have them in the order top down, the way you should answer the interview question. First, you want to walk through the income statement, then the cash flow statement, and finish with the balance sheet always. Now, in column E, we have year 1. So this is simply, what did the financials look like before this change in depreciation? Then we have the delta, the change in depreciation here in column F. And column G is simply what that impacted change looks like. So now we can start off, and if we increase depreciation, as we mentioned is an expense. It's a non-cash expense, but it's an expense that shows up on the income statement. So if you increase depreciation, you're increasing expenses by 10, and then as a result, you are decreasing your earnings by negative 10. So then we come down, and since we have now decreased our earnings, we're going to pay less in taxes. How much less in taxes? $2 less in taxes at a 20% tax rate over here on the left. Now, that means since we're paying 2 less in taxes, our net income is only down by 8. So we're down 8 on net income because we've increased depreciation by 10 on the income statement. That's all you need to say on the income statement. So then we come down to the cash flow statement. Net income flows from the bottom of the income statement to the top of the cash flow statement. Since that's down 8, that's going to decrease there by 8. Now, depreciation is a non-cash expense. So to reconcile from accrual accounting to get to cash, we have to add back that depreciation because there was no actual cash going out the door of the business to pay for this quote-unquote depreciation expense. So we add back that depreciation amount of 10 in the first place, and then we see our cash from operations is plus 2. Now, our capital expenditures, we have no change there, and we have no change in debt, so there's no change in cash from investing or cash from financing. Our change in cash balance for the period is plus 2. Now, next we come down to the balance sheet. We've gone through income statement, cash flow statement, we come down to the balance sheet, and we see that our cash balance, which we calculated up above, our change in cash is plus 2. Then we come down to our net PP&E. Net PP&E is simply the PP&E amount minus depreciation. Well, we increased depreciation by 10, so we're going to have to subtract 10 here. And our assets, our total assets, are down by 8. And then, to balance, because assets must equal liabilities plus shareholders' equity, we have no change in debt, but our shareholders' equity is reduced because net income flows into retained earnings. Since net income was negative 8 up above, shareholders' equity is negative 8, and the balance sheet is negative 8 on assets, negative 8 on shareholders' equity, and everything balances so you know you're right. Make sure to follow this order. High-level recap, remember that depreciation is a non-cash expense. You must add it back. Remember on the income statement to adjust for tax amounts. This is something that you're probably going to have to ask for the tax amount in your interview. And then never forget to decrease your net PP&E by the amount of increase in depreciation because it is net PP&E, not just PP&E. Hope this was helpful, and looking forward to seeing you on the next one.